Welcome to the Techno Fundamental Report for September the 18th. Well, 50 years. I've been doing this now for 50 years as of September the 15th. And you know, as I reflect back on my situation, I started in the business right in here. And this was probably one of the most difficult periods I ever experienced. This was the bear market of 1974. Now, I started in 76, so kind of right about in here. Now, I tell people all the time, I say, when you're starting your career, I think the most important thing is to develop a relationship with a mentor. Now, my mentor was Gene Newton. And Gene was with Howard Weil. This was the Howard Weil Louise Friedrichs. I was the branch manager for the Pensacola office. And I worked with Gene almost on a daily basis. And he was famous for being a football quarterback that won a major game like a Billy Cannon type of situation. And his nickname was the Mouse because he was small, but he was fast. And in 1956, he was named the All-American quarterback team. But Gene taught me things about analysis of the stock market that I don't think I could have learned any other way. So having a mentor was very important. Now, one of Gene's favorite economists was Jim Paulson. And Paulson recently came out and pointed out, he said, the Fed ease will be big for the stock market. This is the only bull market in post-war history which has lived its entire existence with negative excess financial liquidity and with an inverted yield curve. This is about to change, and stocks will love it. So you can see here with these charts, you have an inverted yield curve. Also, you have, negative liquidity. But Paulson is of the opinion that we're getting ready to really have a nice bull market. The Fed has a lot of problems, and, I really kind of have to question the purpose of the Fed. Now, if you pause your video player, you can see what the critics are saying. But the Federal Reserve, this is according to Milton Friedman, the Federal Reserve, the privately owned U.S. central bank, definitely caused the Great Depression by contracting the amount of currency in circulation by 1/3 from 1929 to 1933. I think the government solution to a problem is usually as bad as the problem, and very often makes the problem worse. So, the Fed, I don't see the point. They tend to be wrong a lot of the times. Now, they just cut interest rates today, so we'll just have to see. But I'm very suspicious of the purpose of the Fed. Personally, I think that we should set interest rates by the free market, whether it's the 10-year government bond, the 5-year government bond, the 30-year government bond, it doesn't matter. But having individuals guessing, basically, as to how to manage monetary policy, which could be easily done by the Treasury. So I'm just of the opinion that we kind of need to rethink it. Diversification is a protection against ignorance. It makes very little sense for those who know what they're doing. Diversification may preserve wealth, but concentration builds wealth. Peter Lynch, diversification is a useless investment strategy. In fact, he coined the word diversification. So what happens is that when you start getting just think about it this way. Let's say it's 1974, 1976. You have 100 stocks in your portfolio, 1% per stock, of which one is Walmart. Well, it's not going to move the needle. You've got to have a concentrated position in Walmart to really make a difference in your portfolio. So let's take a look at the market, see what's going on here. We continue in a very nice uptrend. This is the NASDAQ. You can see here we made this low back on April the 7th. So the only thing I would say in a cautionary way is this is getting kind of long in the tooth. I mean, we're up to 5-6 months of an uptrend. We may be due for a pullback. We'll see. S&P 500, same thing. We made the low on April the 7th, and we continue in a very nice uptrend. The primary trend, comparing to the 200-day moving average, the primary trend continues to be up. Mortgage rates, you can see here they're starting to really turn down. In fact, I heard that recently the mortgage market is doing much better because there's a lot of refinancing. So it looks like mortgage rates have kind of turned down here, which will be good for young home buyers. The aggression index, well, we're comparing the NASDAQ to the consumer staples, hitting another new high. This is a very positive indicator. It's an all-time new high. Looks good to me. Now here is our indicator where we look at interest rates over the last 125 trading days, which rates have dropped by 9.45% for the last 125 trading days. You can see interest rates are definitely in a downtrend. And like Paulson was saying, the economist Jim Paulson was saying, this is very positive for the stock market. New lows, well under control. The sellers have pretty much dried up, and we're seeing a lot of new highs. In fact, let's look at some stocks that are making new highs. This is Astera Labs making a new high today. A lot of this is really very positive. Here's Bloom Energy, which is fuel cells. Very interesting technology. In fact, I think this could be a big one. I'm in the stock. I'm also in Astera Labs. But this is an interesting situation where you have a fuel cell that will run on hydrogen, natural gas, or biofuels. And as these AI centers are being built, they need electricity. To build a conventional electric plant takes 3 to 5 years, whereas Bloom has a Bloom box, which is a fuel cell, that can be up and running in 180 days. It's extended here, so be careful. I mean, I would wait for some consolidation. Seagate Technology. This is also a stock making new highs. They're the storage of data. A lot to do with AI. Here we have Google. I want to point something out about Google. It just hit $3 trillion. Now, I think the most important number you can look at is market capitalization because, Peter Lynch always said in his book, One Up on Wall Street, that you need to look for the 10 baggers. Well, if this company goes up tenfold from here, that's $30 trillion. I just don't know if that's possible. So I would rather find something that is market cap area where I could potentially make 10 times my money. Now, what I've also noticed is that once I double my money in a stock, it tends to keep going. Like Tesla, back in the early part of this decade, we bought Tesla and it doubled, and then it went up tenfold. So hopefully that's the case. So anyway, if you have any questions, please let me know. Thank you very much.